Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend, Sam Clement. Sam, say hello.
Hey John, how are you doing?
I'm doing very well. Thank you for asking. I hope you're doing well.
I am.
Well, good, good. Sam, you and I have talked about it recently, and, we were seemingly to get a lot of the same questions. Obviously, we just got finished with the series on income and wealth inequality, and we continue to get questions about inflation, which we'll address another time. But one of the ones, and maybe a little bit more obscure for some folks, but one of the ones I've been getting, and you said that you've been getting, is people worried about the US dollar's status as a reserve currency.
Well,
And is this going to end at any time soon? And the thing about it is, Sam, it's probably pretty interesting to kind of take a look back and figure out how we got here and why we're even talking about this. What is the status of the US dollar as the dominant global reserve currency?
and you mentioned we've been getting questions on inflation, and we've got questions on cryptocurrencies and Bitcoin, and they're separate, but they're kind of the same, and I think the root of them is kind of the same. It's even when we've talked about debt in the past, or the amount of debt we've been piling on, and really it's the same kind of fear and the same issue, and I think the root of it is just history. You look back in history on other countries, and they start printing money, and debt gets out of hand, or heck, take any business that lets their debt get out of hand, and things tend to not turn out very well. And that part of that is the decentralized argument with cryptocurrencies, and inflation. There's fears with that, and what's going to happen if we start printing just an exorbitant amount of money, and I'd say we already are, but nonetheless, I think they're all kind of related, and it all goes back to the question. I'd put it simply as, when has this worked out well before?
Well, I mean, you're absolutely right. And, when we take a look at the US dollar just out there, just the sheer numbers of dollars, and it's certainly intuitive to think that at some point the demand for all these dollars out there, or the supply of them, will eventually swamp demand. And if that happens, then the dollar will fade as the dominant global reserve currency, and it'll get weaker, which means that our imports will be more expensive, and we'll have just overall a general increase in both interest rates and inflation here in the United States, which obviously no one wants to have. So that's kind of the reason why the dollar, being the world's dominant reserve currency, is so important to Americans. It's because it keeps interest rates lower and inflation lower than what it would be ordinarily, given the sheer size of our deficits.
Yeah, I mean, it's just supply and demand. There's a ton of demand for our currency, and a ton of demand for our debt, our treasuries. And what that means is, we've talked before about price and yield, how they're inversely related. And price goes up when demand goes up, and there's just continuous demand for our debt, and US dollar denominated debt. And what that means is the price keeps going up and the yield keeps going down. So I mean, people keep demanding it, and it's an argument that it keeps our yields on our treasuries, or our interest that we have to pay on it, lower than it would be for most other countries. And it's hard to argue. I mean, it's kind of a fact. We've talked about it recently with Japan coming in and buying more, and how that keeps yields lower. And okay, is China going to buy or sell more, and what does that look like, and how does that impact us? And so it is a big part of it, and it is it's good for our government, and it's good for our economy.
I would say that's without a doubt. But when you take a look at the sheer size of the currency markets, and we take a look at sheer size of foreign exchange reserves out there in the system, it's mind-boggling. I mean, it's hard to compute really these dollars, really the amount of money that changes hands every day in the global currency markets. And Sam, I just went to the IMF and I pulled up some data. At the end of the fourth quarter of 2020, the IMF estimated there were 12 trillion 700 billion $758 million worth of reserve currencies around the world. And of those 7 trillion, 5 billion and change were US dollars, meaning that the US dollar was about 60% of global reserve currencies.
Yep. And dollars are involved in 90% of transactions in foreign exchange markets. I mean, someone's taking a bet on one side or the other against or for the US dollar, pretty much for all intents and purposes on every single foreign exchange trade.
Yeah, no, I mean, and you know, a little bit of a history on why the dollar came to supplant the pound was all the way back in 1944, Bretton Woods Agreement and what have you. I'm not going to go through all of that, but it does. I mean, does bear mentioning that after World War II, the U.S., because we hadn't really suffered the ravages of war on our infrastructure the same way that happened in Europe and Asia. Um, I think the U.S. accounted for something like 50% of global GDP. So it's very understandable why, with such a dominant economic power, why its currency would be the primary reserve currency. And, you know, it just remained kind of unfettered for several decades, particularly with the Soviet Union being capital controls and not capitalistic. But even today, you know, the US has fallen from 50% of global GDP down to, I forget, with 18, 19, 20% of thereabouts. And yet, even so, we still remain the primary reserve currency. And Sam, I would say it has less to do with having the dominant level of GDP, although we're still, you know, huge. I think it has as much to do with the liquidity and transparency of our financial markets and our overall ease of doing business, as well as our longstanding tradition of the rule of law and strong individual property rights.
Yeah, and I think you're exactly right. Because then earlier you mentioned how the dollar is about 60% of the foreign exchange reserves, and next in line is the euro at 20%. I don't think anybody wants the euro to be the global reserve currency now. So that's 80% right there, and then you have the yen at 6%, pretty far down the line, but the third most for foreign exchange reserves. And then what's crazy now is the pound in fourth place at 5%. Back when that used to be the global reserve currency, and then the next one you have is China, the renminbi, and that's where what you hit on with the capital controls and the just opaqueness of the economy, and you know, I don't think China necessarily wants it to be the reserve currency because they'd have to become more transparent about what they do. They would not be able to, you know, manipulate their capital accounts like they do right now. And so,
Oh, wait a second. Wait a second. The Congress says that China is not a currency manipulator.
No, they just peg their currency to another one.
I'm sorry, I spoke over you, but you're absolutely right. Right now, I mean, for those people who were truly worried about the U.S. losing its status as the world's primary reserve currency, I have to ask one basic question, kind of piggybacking off what you just said. What's the alternative?
The euro?
Well, I mean,
no one wants that.
Yeah, I mean, that's it. I mean, right now it truly is the euro for all intents and purposes, and because the renminbi, yuan, whatever we call it today, um, it's not convertible. You know, the Chinese financial system is not strong enough or mature enough to handle it. There's not enough liquidity in the currency, so that's way down there. That's way down the road. Maybe one day, Sam, just not today. And the euro, that's only 20% of reserve currencies. And then I have real concerns, not necessarily big concerns. I don't stay up all night worrying about it, but I have hesitation to think that the euro will continue to exist in its current form in a decade. You know,
Well, I mean, it's kind of
at some point,
obvious with some of these other countries that are a part of the eurozone, and you know, that are using the euro as their currency, and just the flailing nature of them, and it's, you know, it's just not looking good. It's not a very healthy currency right now, and it hasn't been in the past. They've had their own, you know, euro crashes and crises, and you know, nobody wants to peg their whole balance sheet on a currency like that.
well, I think all we will need is one more sort of global economic downturn, and they'll come. But depending on the severity of it, at some point, I mean, Greece is just going to throw up its hands. Spain is going to throw up its hands. Portugal is going to throw up, the Cypriots, the Maltese, all these Southern European countries are going to throw up their hands going, we're not in control. How can we be in control of our fiscal policy if we're not in control of our monetary policy?
and you can't. And I think it's a funny quote that gets brought up in times about the U.S. being the reserve currency, and it was France's finance minister in the '60s called it an exorbitant privilege to be the global reserve currency, and I mean it is, but with that comes a lot of issues as well, and it's but it goes back to your simple question: who would take the place of it?
Yeah.
Who is there's not an alternative. There's nothing else that can be done. There's nothing that could possibly take the place of it, and nothing healthy enough.
Well, you're right. So where do we stand on this, Sam? I mean, clearly we're not trying to be cavalier about our budget deficits, our trading deficits, our current massive current account deficit. But as long as there's demand for it, as long as there's demand for the U.S. dollar, as long as dollar-denominated debt, as long as commodities are traded in dollars, and as long as we maintain the most liquid, most transparent financial system in the world, Sam, it seems as though there will always be some measure of demand for U.S. currency units. So even if our share of global currency reserves falls from the current 60% down to, say, 55%, 50%, is that, and that takes it, let's say that's a trend that takes several years to get to. Is that decline going to be enough to cause the dollar to collapse, to cause interest rate to rise exponentially?
When half the globe's demand for currency is in our own, I mean, to me, that's not enough of a shift in demand away to, do anything to even really impact our, treasury yields even that much, as long as it wasn't some significant pull the rug out, overnight type thing. Especially when you look at one of the largest buyers of it, and that's here in the United States as well. So it's that doesn't really scare me, and maybe that's being cavalier, but I mean that's my answer, and I'm sticking to it. Is that there's no evidence of a shift away right now from the U.S. dollar as the dominant reserve currency, and there's not a lot of appetite from the only possible one that could at some point overtake it, and that being China. And that's weird to say considering they're only about 2% right now of all the central bank reserves. But, if I had to guess who it would ever possibly be right now, wouldn't you agree that I guess that's the most likely one?
That is the most likely one, just in terms of sheer economic strength. However, the Chinese financial system and the liquidity of the Chinese financial markets have a long way to go before the renminbi can effectively challenge the U.S. dollar.
And it's what they've grown on and their kind of platform. That's what they'd have to get rid of. They've gotten so big and strong based on the government's role in the market and a lack of transparency, and that's, you take that away, and that's kind of the stilts that it was built on. And it's kind of a good question of whether it's sturdy enough to actually have these 6% GDP numbers that they put out year over year, and whether that's real or whether that's kind of the government that owns 90% of all the major banks over there just propping things up.
Yeah, I think they'd have a much easier time recapitalizing their banking system than we would in case it failed. No, but Sam, I mean, you really do bring up some very valid points. Part of the unattractiveness of the yuan or the renminbi is the fact that I think it's fair to say that I think Western investors probably question China's adherence to the rule of law and individual property rights. And we've talked about this time and time again about how important those two things are. And so as bad as our deficits are in the United States, as much as the supply of dollars should be swamping demand, it is those two things which really help to put a floor on the demand for U.S. currency units: adherence to the rule of law and strong individual property rights. And that's our biggest threat. I don't think it's some deficit spending out of Washington. The biggest threat to the dollar in terms of it being the primary reserve currency, in my estimation, is whether or not we continue to adhere to the rule of law and have strong individual property rights. Anything that goes against them, including capital controls, will hurt the demand for the dollar far more so than our running a massive current account deficit.
Yeah, financial sanctions and you leveraging the demand for the dollar, and the need to settle transactions in the dollar, to me, is, like you said, kind of the biggest fear, of what would possibly rock the dollar as being the reserve currency, because you're seeing it a little bit in Russia and their exports to other countries, and the currency composition and the amount of dollars they've been using has gone down, and that's for obvious reasons. We're not really on we're not friends right now with the Russians, and so the amount of euros they've used has gone up, the amount of rubles as the currency composition has grown up, and even the yuan, the yen, things like that, and the dollar shrunk significantly over the past 2 years, and that's obvious. But now, if we were to kind of start using financial sanctions across the globe and really trying to manipulate other countries by tightening demand to our or supply to the U.S. dollar, then we may have something to talk about.
Well, I think you're onto something there, without a doubt. Now, it's I don't envision the U.S. dollar's percentage of total foreign exchange reserves going up dramatically from 60 to 70. I don't think that's happening. I just don't think we're going to see the type of collapse that a lot of people are concerned with, unless we bring it on ourselves.
Yep.
And so that's the real threat. And particularly when we see all the discord that's going on in the United States, we see all the politics in Washington from both sides of the aisle. Anything that really weakens our public institutions, or even our private ones, anything that weakens what has made the United States the dominant financial market, the dominant economy in the world, anything which weakens those also weakens the US dollar. And when that happens, we're just going to have to be willing to pay more for goods. We're going to have to be willing to understand that borrowing rates are going to go up. So when we weaken those institutions which have made us great, we're also hurting ourselves. And not just figuratively, quite literally, we are hurting ourselves economically by doing this.
Yeah.
So that is what we need to be on guard against. If we're worried about the U.S. dollar being the primary reserve currency, we need to be worrying about making sure that our society has faith in our public institutions again, our private institutions. So we need to be doing everything we can to shore up our society so other people will have faith and confidence in what we're doing over here in the United States.
Seems like a tall task.
We just need to quit playing politics with one another and start pulling in the same direction. And then we won't even have this conversation ever again. What do you think about that? What do you think about that?
Easy enough.
All right. Well, guys, I'm not sure if we got much accomplished today, but we always love to hear from you all. So if you have any comments or questions, by all means, please let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you are interested in hearing more, reading more of what we have to say or how we think, by all means, please go to oakworth.com and take a look underneath the Thought Leadership tab. There you will find all kinds of interesting information. All right, Sam, we'll give you another shot.
That's all I got.
That's all I've got today, too. Y'all take care.